someone asked 6 months ago at least, or more, saying, well, we're having a global expansion on this. And I said, well, if you have a global expansion, you must have a global contraction following it. But then the corollary is, well, what causes a global expansion? There has to be global easy credit. Where did this global expansion come from? There had to be globally a lot of cheap money floating around. And this, as I said in the beginning, this is a global problem. And all commodity prices are set globally. They're not set in the United States. And there was too much money pumped almost everywhere. Food prices were up 21% in the first quarter in China. And China is suffering very severe inflation because it is keeping its yuan undervalued versus the dollar. And that will have to fall apart because of this inflation. Oil was going up 105% year over year. U.S. gas prices are only up 21% amazingly, despite that big rise in oil. Imported goods prices in the U.S. are up 14%. We're lucky they're so low. We're lucky gas prices have only gone up 21%. These are very big price increases, though. There's lots of ways of measuring money supply. They all have problems. Nothing is perfect. There's two that you should look at, NZM, which is money with a zero maturity. That means some form of cash, and get a hold of the money right away and spend it if you want to. You don't have to sell some bond or some asset to get it, or some CD, which is locked up in. That's up 38% on an annual rate in the first quarter. That is enormous. That is unbelievably enormous. M3, the broadest money supply, which includes all sorts of things, is up 18% annual rate in the first quarter. And we're going to see that's higher than in the 1970s. Now, people will explain this away. There's all sorts of excuses. Oh, it doesn't really count because of this reason. It doesn't really count for that reason. That's irrelevant. Don't pay attention to those. Many top economists and top bloggers are claiming, oh, these numbers don't indicate there's any inflation. I mean, you simply have to open your eyes and look. Now at 20% right now. This is from 2004. You see it's just been going up and up and up and up. The government stopped publishing these figures in 2006. They have to be reconstituted by researchers. And when the government stops telling you something, they don't want you to know about it, and you should worry immediately. What happened in the 70s? M3 growth peaked at 16% in 1971. We are already beyond that period. Currently in May, early May, it's 20%. We've already gotten above the peak in the 70s. So our inflation has to get beyond the 70s level already based on what's happening. The PPI in the 70s, that's the producer prices, peaked at 36% the next, 2 years later in 73. But it took 2 years before we got producer prices. Then 3 years before CPI had a temporary peak at 11%. And only in 80 did CPI peak at 14%. That's consumer prices. So that was actually 9 years after M3 peaked. How has the Fed gotten all this money and grown the MZM by 38%? TAF, they started this in December for $20 billion, 2 auctions a month, so that's $40 billion. By January it was $30 billion each auction, so it's $60 billion. By March it was $50 billion, so now it's $100 billion each month. May they've raised it to $75 billion, so now it's $150 billion each month. So all of this is liquidity. It keeps going into the system, going into the system. All of this is inflationary. They created in March the TSLF, Term Securities Lending Facility, and this swaps treasuries for basically these worthless mortgage bonds. Yeah. So the banks and brokers can get treasuries, and then they can borrow money off of those treasuries, which they cannot. They can't sell these bonds. They can't borrow money from them. So this gives them also more cash to operate in. And then the PDCF, this is the primary dealer credit facility. This is for brokers. The Fed is not legally allowed to lend money to brokers. After Bear Stearns, they set up this facility. And there's some obscure 1930 law that in a crisis they can lend money to anybody. They're using that law. So this allows them to pump money not just into banks but into brokerage houses too. So this is a brand new thing that never existed before. They've gone way beyond their official bounds.